So here's what to look for the March 19th Federal Reserve interest rate meeting. It's taking place at 6 p.m. UK time on the Wednesday, and markets are going to be ultra focused here on the GDP projection. At this Fed meeting, we get the dot plot. Now, this dot plot will tell you the path of interest rates that the Fed are expecting, but crucially, where they're expecting GDP to go, right? So in December, they saw GDP coming in for 2025, right, 2.1%. Now, we've had some very negative sentiment indicators out. Business confidence has been lower. US consumer confidence has been lower. We've also been seeing like a slightly weaker NFP jobs report since the, in the last NFP print. But what the market's going to be laser focused on is, what do the Fed see about GDP? Where do they see GDP going? If that comes in significantly lower, so you see that coming in like 1.4, 1.3, 1.2% for 2025, then you'd expect a sharp sell-off in the equity market. We also look at the unemployment rate. Where do the Fed see the labour market going? The ADP jobs number was lower, but the ISM employment index was fine. The NFP was weaker, but not too bad. So look at the unemployment rate. Inflation, it'll depend on the latest PCE print, but really the major focus is going to be that GDP projection, and where markets see that going. Now, tariffs and Trump are so unpredictable, and it's April the 2nd is the big sort of deadline for tariffs from the US. So we have got some time to play out. And for those of us who are following these tariffs, they're off on. I call it the tariff okey cokey. He puts the tariffs on, the tariffs off, on, off, shake them all about. So that'd be very difficult for the Federal Reserve to make any sense of it. But I think they'll read the GDP as what they think about the tariffs. So that's what to look for this meeting. We'll be covering this live and going into the projections rate as well. In terms of reaction, I'm going to be making the decision at the event because there's so many moving parts. It's quite difficult to project in advance exactly which markets are going to be moving. However, but the GDP is going to be the major factor in this summary of economic projections, and crucially, we get the summary of economic projections. So there's more data for the market to dig its teeth into. So that makes it an event really worth covering.